Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. After a quick market wrap up, this is for tomorrow, Friday, October 27, 2023. Basically, we look at what happened in the market today and then try to understand and see what we can plan for the next day very quickly. So, today it's a continuation of the fall. The Fyers are selling big, global gives a poor, technical charts are weak. Market is sliding, not even consolidating, it's breaking down, gap down and fall. Wicks is spiked and then but again settled. Major supports are breached. It is a monthly expiry that's very volatile, and US market is in red. There is recession fears, and all of this, right? Let's just look at the charts and then try to quickly see what's it. So here we can see that. It's a Nifty. Here we have the Nifty. We have a breach of a parallel channel inside a parallel channel. Yes, over here a breach happened, and there's a 3-month consolidation that you're seeing that got breached yesterday. And today we have further breach with a gap down, but it has managed to close. We're talking about Nifty index managed to close above the 200 exponential moving average. 200 moving average is always very crucial, right? It's managed to close well. So let us see whether this support at the 200 moving average near to 18,800 will hold or not. That's all. This is the RSI momentum indicator, which indicates absolutely bearish. We're talking about daily charts, and ADX indicator that we're using to understand the trend. It's bearish and it's rising up bearishness. So on a short term, absolute bearishness, and 3 days, we lost 100 points or more. It's an unpatched breach. It's a head and shoulder breach. It's higher low, the pattern breach. It's multiple breaches of the major supports. Now you can also see that this is in a channel, so we can anticipate a move till this 18,300. If it is not holding support, it may happen tomorrow or later. That means it may touch this channel bottom and then bounce up from here. So that could probably be some more downside, maybe there, right? And if you look at the Fibonacci retracement level, 61 is 70,000. So there's always a chance that it can move up to 17,000 also. There's a probability. Anything beyond that is actually a big recession crash. Complete bear market after 61% retracement. That's 70,000. Hope we don't go to that. Hope it gets consolidated within the channel. It takes a support down somewhere in this channel bottom and then bounce up and end the correction. So correction is now going to nearly 7% on Nifty. Banknifty, it's a little more sharp correction that has happened. So probably near to 10%, of course, 9.5% of correction has happened. Here also we have the head and shoulder, higher high, higher low pattern breach and M pattern breach, and then major supports breach, neckline breach. So we absolutely, again here also we have a channel, and you can anticipate that it may go to the 40,000 range. And if it breaches from there and go and breach this 37,500, that's a 61% of natural retracement, we have big trouble. Here also the RSI momentum indicator is bearish, and the ADX indicator for in the direction is also bearish and rising, increasing strength bearishness. Right? So now all about the momentum and the trend bearishness. Okay, short-term bearishness is happening. Levels to watch is based on the Fibonacci retracement, previous swing highs, lows, and the gaps. And the previous swing lows, as you see in the channel. We're also using the channel also as an indicator to find out the levels. Combination of all of this. So that's where we are. Right, the bears seems to be dominating and then pulling the market down. Global gives another retreat, so it may continue. Right, of course, a sector sell-off is there. That means that we have this major heavyweight in HDFC Bank had fallen 2%, plus Reliance 1.3, ICSA nearly 1%, 1% Infi, TCS 1.5%, 2% Kodak Bank, ITC 0.5%. So ITC was green, but otherwise all the major 6 heavyweight stocks have big sell-off by the Fyers. And by the way, Fyers sold nearly 7,000 crores. DAS could not buy that much, but nearly 6,500 something they bought. So it's the Fyers who are selling. And the primary reason that they say is, the fundamental analysis says because the US yield, bond yield, 10-year, is spiking up to 15-year highs. 15-year highs. It's nearly 5% or something. So this is the sole reason why money is flowing backwards towards US instead of staying in our markets. So that way also poor cloud, because rupee is very weak, no? Just because of RP intention is not breaking out of above 83.5, and dollar index is also spiking up. Dollar is spiking, rupee is weak, oil is also at 80 plus, no? Still on the top of the channel, ready to break out. Gold is spiking, money is shifting, getting shifted elsewhere. So all bearish cues are there right here. So all we have to do is to buy in SIP mode good quality stocks in small quantities for every dip it happens, right? And you have to be very cautious if you're a trader. Always have spreads. Non-directional strategies are very difficult because when the market is in direction move, it's very difficult to roll down and roll up, right? Quick reversal also can happen because a lot of dead cat bounce can happen because a lot of big falls have happened very sharply, particularly in the last 3 days alone. So be cautious in all of this, right? So that's my view. So look at these support resistance levels and then take the bets very cautiously. And the VIX is still, it spiked above the 12 today, but again settled below the 12. So it is spiking above 1520 and all. We have to be cut absolutely out of the market or then cut short. Focus on investment only, not trading. In trading, if at all you have to take, and VIX is remaining below the 12 or 15 below the 15 below 20 levels, I just reduce your position size and play it safe. And always have hedge positions, completely over risk so that it don't wipe out. Do not take overnight risk. Black swans will come in anytime. There is war uncertainty also hovering around, right? So that's all I have. Hope it helps you plan your trade for the next day. Tomorrow is a Friday. We had a big fall. Probably some consolidation may happen before market for the first round. Or probably this may end the correction because 7% of correction is pretty decent. Correction has already happened. It may say. So we never know what the market rate means. All we can do is look at the levels as per the probabilities of support and resistance and play it safe. Manage your risk. That's all. Happy trading, happy learning, happy investing. Bye bye.